1 p.m. market update for Monday, the 14th of November. You know, I'm really happy to tell you about our one-on-one Market Club coaching. Ask yourself if it's right for you. If you'd like to get a free consultation, just give us a call at 877-219-1482. That's for a free consultation, and the call is free. You know, Italy and Greece passed the baton to the technocrats, but does it really matter at this point? As we start this trading week, we've seen a change in the governments of both Greece and Italy as the rule of the technocrat is now upon us. It's all well and good to say, yes, they can make the hard decisions that politicians can't seem to do, but the reality is it's a bitter pill for the citizens of those countries to swallow. The bigger problem, the one that is much more complex and not as easy to solve, will be social unrest. That's my opinion. No matter how things are sliced and diced in Europe, there is still a mega amount of money owed to the banks that needs to be reconciled one way or another. The way the markets are opening today, it would appear as though no one is easy with the current changes. It may just be a case of buy the rumor and sell the news. I believe this is going to be a very interesting trading week, one where we'll decide the trend for the balance of the year. As we have stated, our longer-term trade triangles remain negative on the equity markets. Only time will tell whether that proves to be a position to be in at the moment. Now let's go to the charts and the video and see how we can create and maintain your wealth in 2011. So here we are. Homepage, you can see the markets are all pretty much on the defensive for the most part. We're going to go to our portfolio manager where we're going to be looking at several different markets and comparing them. So here we are, and what's astounding to me, what really stands out, is if you look at this. The S&P, Dow Jones, NASDAQ, Silver are all 55, meaning at minus 55, slightly lean to the bearish side, but they're all in a trading range. The gold market is plus 75. The copper market's minus 75, reflecting the economic conditions in the equity markets. You've got crude oil 60, which is a trading range. Remember the big 100 level we talked about all last week? And you have a plus 100 on the dollar index, which is the only 100 we're seeing right now. And look at the Reuters-Jefferies CRB Commodity Index, minus 55, indicating a trading range. So interesting markets, but this is all going to change. So let's go to our first market, and that's going to be the S&P 500. And as you can see, we've got our Donchian trade channels in already. We've got our PSAR. And just looking at this market right now, you have to say, look, it's just not looking so stellar. And I'm going to put in our MACD and our Williams percent R, and I'll show you how to do that really easily. So you simply click here, and you click on the Donchian trade channels and parabolic for on screen. And below the chart is right here. Below the chart is right here. So you want to put in our, hold on, the MACD, moving average conversion divergence. I'm sorry, I just had a moment there. So, and I'm also going to put the Williams percent R on. So whatever you put in first will go down towards the bottom, and the last one will stay on the top. So let's take that off, and let's just take volume off because it's not that interesting to us for the moment. So here we are. We've got a little bit of negativity coming in here, and also we are still below the MACD line. The blue line is still below the red line, indicating further weakness. So, and if we put our trade triangles in, you'll see that our monthly trade triangles are still negative, and our weeklies are positive from 1220. And really, that's the line in the sand in this market, is 1220. If we go below that level, we'll pick up a lot more downward momentum, in my opinion. Let's go to our next market. That's going to be, I believe it's the Dow Jones 30. And we've had some good earnings. Let's not fool ourselves. We've had some good earnings, but it's still a mixed plate, and we have still had, really since October, the end of October, to the middle of November, a pretty flat market. It's sort of down, up, down, up, down. And really the key there is going to be the 11.6 area right here. If we go below this area here, and I'm going to draw that on the screen so it's very clear. If we go below this area, it's going to really not be such a good picture for the Dow. We've got our monthly is down, our daily is down. Only the weekly right here is positive. So everything else is pretty much negative. So if this swings down to a red triangle, we just change this to a red triangle, then this will put a much more downward pressure on this market. And potentially you could argue both ways. The bulls are saying this is a potential triangle to go higher. We could also just be rolling over like we did before, and like we've done so many times before in this market. But the key level here is, again, 11.6. If we go below that level, 11,600, then I think we'll see more downside pressure on the Dow. So let's clear the screen off, go to our next market. In the next market we're looking at is the NASDAQ composite. And again, this is not looking as good, partly because you got Apple under a lot of pressure here, and that's been the golden child of the NASDAQ here. But again, you can draw that line in the sand that's going to be very important, and traders around the world are going to be watching. And the first line has to be right here at 2,600. If we go below that, we're 2650, so another 50 points lower, 50 or 60 points lower. If we go below this level, it's not going to look too well. And certainly this level here, the 2550 area, is the last line of support. If we go below those levels, we'll see this market under more pressure. But another way to look at it is just look at what's going on with the MACD and also the Williams percent R. We're still on the negative side there. We're on the negative side of the PSAR. So technically the market isn't looking that good. And the fact that we couldn't get a rally going, no follow through, and as I say, we closed below the lows that we saw on Friday. The low was 26.49. We're currently trading just about those levels right now. If we close below 26.49 today, I think that's going to really put like a little mini top in there for the moment. So going to our next market, and that's going to be the silver market. I think this has been a big disappointment for a lot of traders, and we've been talking about this and really warning about this because our longer-term trade triangles still remain negative on this market. Only the weeklies are positive, and we are just below the PSAR. Today's action obviously negative with the move down in gold. This is definitely the weak child of the whole complex. And if you can potentially draw a very simple trend line from the lows here, and let me show you how that's going to work. Just click here, and you can drag this up. So that's kind of like where we are right now, right on the trend line. So if we close below that trend line, you could argue that this is going to just be another big push down. And if we go into a double dip recession and possibly a depression in Europe, this is going to be not very good, I don't think, for the silver market. Now we have real-time silver prices. Spot silver is traded 6 days a week, 24 hours a day. And we have all those prices in real time with your MarketClub membership. So if you're a MarketClub member, be sure to check that out. So let's go to our next market. Of course, that's going to be gold, which took a little bit of a dive today. As we've been saying for the last, some time, is this 1800 level is a very, very psychological level for this market. Just like $100 is a psychological level for the crude oil market, this is the same thing that's going on here. This market, however, looks a lot better than silver to me. You've got our monthly and our weekly trade triangles still remaining positive. You're above the PSAR, which is a parabolic stop and reverse. You also have a positive situation. It's getting a little soft here. We're going to be careful. Watch this line very carefully. If it goes below the red line, we may see some more potential selling pressure here. Certainly this level here, this low that was taking place, which we thought was a cyclic low, which proved to be true, around the 1760, around the 1736 level is definitely key. Don't want to see that taken out. So still remain positive. However, this market may have to basically regroup at these new levels if it's going to go higher. Let's see how that works out. Next market we're looking at is going to be the copper market. In the copper market, as we said, it did not look good to us. We had the move here, all of our trade triangles, the monthly and the daily negative. Only the weekly remains positive. Certainly the 330 level, which is a 61% Fibonacci retracement from this level to this level here, is support. If we take this support out, then I think we'll see this market under a lot more pressure. Generally speaking, it is taking its cue from the equity markets. If the equity markets continue to erode, then I think copper will do the same thing. If they regroup and start going high, I think there'll be a support for copper. But right now, copper is an economic metal, period. And if the economies of the world slow down, then copper is going to go lower. And technically, it would certainly want to confirm that with the weekly turning down. If and when it does, it'll be very interesting to see what happens to this market. Now, crude oil, we've talked about this before, and we also talked about the importance of psychology and also the psychology of this level right here. And this level right here, let me just turn this off. This level right here, the $100 a barrel, we said this is definitely a psychological level where you'd see some professional selling. We got very, very close to that level. We hit as high as 99.69 today, and we got 99.69 also on yesterday. So that's definitely a key level. The action today is not particularly good, and we've pulled back quite a bit. And I think basically as this is on the top of the Donchian trade channel, I think we could see this market come down. Key level to watch is going to be obviously this level, the PSAR, which is at 94.83. It's a long way off. Tomorrow that'll pop up, and that's something to definitely watch in this market. But the one thing that's concerning me is the fact that you have your monthly trade triangle, which we've maintained all along here, still negative. You've got a positive on the daily and the weekly. You've got a score of 60 plus 60, which indicates that we're just basically in a trading range. And if we take everything off the screen and go to our next, just get down here, you can see that we're getting a little bit of a divergence there, not really a lot, but a little bit of a divergence. And this is still above the red MACD line. So, but look at how you've lost some momentum here. So I think that's going to be a very important thing to watch here the next few days. So going to our next market, and the next market is going to be the dollar index. Now, as you know, we've been very positive. It's the only one that has a plus 100. We've been very positive on this market. Great action today in this market. It needs to get over the 78.50 level if it's going to go higher. I think it will go higher. I think we'll see the euro go down. We still have all of our signals remain negative on the euro. And I think we are going to see this market trend back up, possibly to test these highs around the 79.50 to 80 level in the not too distant, I think by the end of the month. So let's see how that plays out. But generally speaking, the trend is your friend, and you have all your trade triangles positive, positive, positive. And let's see how that works out for the rest of the day and the rest of this week. So next market we're looking at is going to be the Reuters Jefferies CRB index. This is a very interesting little index today, and I'll tell you the reason why. You had the PSAR gave a sell signal today, indicating that this market should be seeing further weakness, and of course it's largely reflected in the crude oil market. Now, what's interesting with crude oil went up the last 3 days prior. That's Thursday and Friday and also Sunday, but the index really didn't reflect that move up. As you know, you're at the highs of the crude oil, but you haven't seen that in this. And it largely reflects a lot of other commodities that are in this index. But generally speaking, crude oil does have a big swing in this index, and I think given today's action, the fact that it went below the PSAR, and also you've got this kind of movement down in the Williams percent R, and you're just so close to crossing here. And if that's the case, then once we cross there, I think we'll see much more resistance. As you can see, we basically got the MACD got right around these levels, very similar to the PSAR, very similar indicators. But generally speaking, we had the move up. It's a question now, do we pull back and do we test this 305 level, which I think the possibility certainly is there. We haven't seen the market action yet to confirm that, because we really want to see our weekly turn into a red, and then we'd be pretty comfortable saying that that's going to be the case. So let's see how that plays out. But generally speaking, if you have any questions about our one-on-one Market Club coaching, just give us a call. It's a free consultation. It's a free call, 877-219-1482. This is Adam Hewison for Market Club. I'll be back tomorrow at 1 p.m. with your update for the 15th. Every success trading, and thanks for stopping by.